NTA blog. What to know if you've been affected by a federally declared disaster. Each year, disasters affect hundreds of thousands of people and businesses. These disasters can upend every aspect of an affected individual's life, including damage to, or destruction of, their home, business, and critical documents. To assist taxpayers, the President may declare the event a federal disaster, which allows the federal government to help affected taxpayers under the Robert T. Stafford Disaster Relief and Emergency Assistance Act. Once this declaration has been made, the IRS will often provide these taxpayers with certain relief, most commonly by exercising its authority under IRC Section 7508A to postpone certain tax deadlines, including filing and payment deadlines. Sadly, devastating wildfires swept through my community in Southern California, destroying homes, schools, businesses, and entire neighborhoods. My heart goes out to all those affected by these tragedies, especially the families that lost so much. I am profoundly grateful for the tireless efforts of our first responders, whose bravery made a significant impact. I recognize, though it may be a long journey and these impacted individuals need our support, I am confident that the community will rebuild stronger than ever and support each other on the road to recovery. Determining eligibility for relief. For taxpayers with an address of record in the disaster area, the IRS automatically provides filing and penalty relief. Taxpayers without an address of record in the disaster area can self-identify as qualifying for disaster relief by calling the IRS Disaster Hotline at 866-562-5227. This includes taxpayers who recently moved to the disaster area, have records necessary to meet tax deadlines inside the disaster area, and workers assisting the relief activities who are affiliated with a recognized government or philanthropic organization. For preparers in a disaster area with clients located outside the disaster area, the preparer can submit bulk requests for disaster relief following the procedures on irs.gov. Taxpayers can check for disaster declarations and available relief by state or year. Recent disaster declarations and IRS-provided relief include IR 2025-10, California wildfires. IR 2024-282, Juneau, Alaska flooding. IR 2024-256, Washington wildfires. IR 2024-268, Watch wildfires. IR 2024-266, IR 2024-264, IR 2024-253, Hurricanes Helene and Milton. If a disaster-affected taxpayer receives a late filing or late payment penalty notice for the postponement period, they should call the number on the notice to have the penalty abated. What resources and relief are available? When a filing or payment deadline is postponed under IRC Section 7508A as a result of a federally declared disaster, the Treasury Secretary is authorized to disregard for up to 1 year certain acts a taxpayer is required to undertake under the Internal Revenue Code. Filing and payment relief. Following a disaster declaration, the IRS can postpone various tax filing and payment deadlines. This includes the filing and payment dates for Forms 1040, estimated tax payments, quarterly payroll taxes, and partnership returns. For example, in response to Hurricane Helene, the IRS postponed various tax filing and payment deadlines that occurred beginning on September 22, 2024, Alabama; September 23, 2024, Florida; September 24, 2024, Georgia; September 25, 2024, North Carolina, South Carolina, and Virginia; and September 26, 2024, Tennessee. The postponement periods end on May 1, 2025, so qualifying individuals and businesses have until May 1, 2025, to file returns and pay any taxes that were originally due during the postponement period. This includes, but is not limited to, individuals or businesses with a 2024 return normally due during March or April 2025. Individuals, businesses, or tax-exempt organizations that had a valid extension to file their 2023 federal return. Note: payment due dates are not postponed because the extension did not extend the time to pay. 2024 quarterly estimated income tax payments normally due on January 15, 2025. 2025 estimated tax payments normally due on April 15, 2025, and quarterly payroll and excise tax returns normally due on October 31, 2024, January 31, 2025, and April 30, 2025. Tax-free disaster payments. Generally, taxpayers may exclude qualified disaster relief payments from gross income. This means taxpayers likely can exclude amounts received from a government agency for reasonable and necessary personal, family, living or funeral expenses, as well as for the repair or rehabilitation of their home, or for the repair or replacement of its contents. For further information, see IRS Publication 525, Taxable and Non-Taxable Income. Retirement Plan Distributions. Disaster-affected taxpayers may qualify for relief related to accessing retirement plan or individual retirement arrangement (IRA) accounts. For example, a taxpayer may qualify to take a disaster distribution without paying the additional 10% early distribution tax and spread the resulting income over 3 years. Disaster-affected taxpayers may also qualify to take a hardship withdrawal. Each plan or IRA has specific rules and guidance for their participants to follow. Casualty loss deductions. When a federally declared disaster damages or destroys property, taxpayers may qualify to deduct a casualty loss on their tax return for uninsured or unreimbursed disaster-related losses. This can provide much-needed relief for individuals or businesses who may struggle financially as a result of the disaster and can help taxpayers with the financial burden of having to repair or replace damaged property. The taxpayer may deduct the disaster-related loss in the year the loss occurred or in the prior year. However, the taxpayer can only deduct the loss in the prior year if the disaster occurred in an area warranting public or individual assistance, or both. Disaster-specific guidance will generally specify if the taxpayer has the option to deduct the loss in the prior year. Providing the ability to deduct the loss in the prior year allows taxpayers to obtain the tax benefits as soon as they can determine the amount of uninsured or unreimbursed disaster-related loss. When taxpayers want to claim the loss in the year prior to the disaster but they have already filed a return, they will need to file an amended return for that year claiming the loss. The taxpayer must make this election within 6 months from the due date of the tax return, without extensions, for the year in which the federally declared disaster occurred. For more information on the deductibility of casualty losses and electing to deduct in the prior year, see IRS Publication 547, Casualties, Disasters, and Thefts. Other resources. Disaster Hotline. If taxpayers have disaster-related tax questions, they can call the IRS Disaster Hotline at 866-562-5227. Taxpayers can also call to this number to self-identify for disaster relief. Free tax transcripts. Taxpayers who need tax records can get free transcripts using Get Transcript on irs.gov, calling 800-908-9946, or submitting Form 4506T, Request for Transcript of Tax Return. Free copy of tax return. Taxpayers in a disaster area can get a free, expedited copy of their return using Form 4506, Request for Copy of Tax Return. On Form 4506, taxpayers should note that it is a disaster-related request and list the location and type of disaster event. Address change. Taxpayers can notify the IRS of an address change using Form 8822, Change of Address. The Disaster Look-Back Trap. Assisting taxpayers in a difficult time is a welcome relief, but as I discussed in my September 10, 2024, blog post, Need for a Legislative Fix to Eliminate the Disaster Look-Back Trap for Refund Claims, I am concerned that 3 years from now taxpayers and practitioners will be surprised to learn that refund claims may be disallowed under the look-back period required by the Internal Revenue Code because the look-back period does not include postponements. However, as I suggested most recently in my 2025 Purple Book, this is an area Congress can fix to prevent the unintended consequences of statute-barred refunds for taxpayers impacted by disasters. As I discuss in my January 30, 2025 blog, Congress released a discussion draft of the Taxpayer Assistance and Service (TAS) Act that includes a fix for this issue. Conclusion. Experiencing a disaster is a difficult and emotional experience for individuals, families, and businesses. By understanding the options for tax-related relief and available resources, individuals and business owners can make informed decisions about their filing and payment obligations, finances, and tax liabilities. Those impacted may not be able to replace what has been lost, but there is a variety of available assistance to help ease some of the challenges as you move forward. Resources. The following are links found on the blog page. TAS, Tax Assistance for Disaster Situations. TAS, Preparing for a Disaster. TAS, Volunteer Income Tax Assistance/Tax Counseling for the Elderly. IRS, Tax Relief in Disaster Situations. IRS, Disaster Relief Resource Center for Tax Professionals. IRS, Get Your Tax Records and Transcripts. Federal Emergency Management Agency, FEMA. Myth vs. Fact, Disaster Assistance, FEMA. Disasterassistance.gov. Small Business Administration, for information on low-interest disaster loans.
The views expressed in this blog are solely those of the National Taxpayer Advocate. The National Taxpayer Advocate presents an independent taxpayer perspective that does not necessarily reflect the position of the IRS, the Treasury Department, or the Office of Management and Budget. You have listened to an audio version of the NTA blog. This is a computer-generated AI voice narration. Inconsistencies in pronunciation and tone may occur.